Welcome back to the ICT or SMC beginners course. Today we're covering order blocks part 2, and in specific, we're going to be going over high probability order blocks. So if you find that your order blocks aren't working or you're on the wrong side of market moves, this video is definitely for you. In specific, we're going to be covering how to spot a high probability order block and ultimately how to differentiate it from a normal order block. We're also going to cover how to enter and exit an order block trade, and finally, how to know when order block is failing so you can minimize your loss and make sure you're taking high probability entries with low drawdown or low risk. So without further ado, let's get right into that. Alright, so now let's dive into what makes a high probability order block a high probability order block. And the first thing that I want to go over quickly is a reminder as to what a standard order block actually needs. And first off, a standard order block is going to need a narrative. And what I mean by that is there a story behind why price is reacting, bouncing, or rejecting in this area? If you don't have a reason or a story behind this, then you don't have an order block. The next thing you're going to need is a close above a bullish order block or below a bearish order block, and that's going to be determined by the opening price. The last thing that you're going to need here is a wick or a move above the high or below the low of a bullish or bearish move that creates this order block. And if those things are still confusing to you, I'll quickly cover them here, but for the most part, you're going to want to go back and watch our previous video, which goes over all of these in depth. Now, the two other qualifying factors that we're going to need in order to qualify or recognize a high probability order block is we're going to need displacement, and then this is going to be recognized in the form of a fair value gap. And lastly, we're going to want to see a break of structure, and a market structure shift is okay as well. But for the most part here, I like to use these as trend continuation models. Now, if we're going to depict this, you can see down here at the bottom, this green candle here has a wick above this high, which means that we've met this qualification here, and we have a close above the opening price of this candle, which makes this candle here an order block. Now, price does initially tap into this and push up, that's great, but what has happened after the fact is we've actually displaced, creating a fair value gap from this candle's high to this candle's low, and we've also broke structure above this swing high to the upside. Now, what does that mean? We now have a high probability order block as long as we have some form of liquidity pool, fair value gap, or some narrative behind this. And for this example, let's just pretend that we've swept liquidity here and now we're pushing up higher following our bias and our narrative here. So what can price do? Well, we can look to enter off of this order block here. Price is likely to come back in here, rebalance this fair value gap, tap into this order block, which is now high probability, and then push up, continuing to break structure and create once again another fair value gap, breaker block, or fair value gap, break of structure, and order block right here. And this one would be two series down close candles. You then have this fair value gap in here, and you have your break in structure above this candle's high right here. So I hope that's starting to make some sense. If not, we're going to go hop into some real-time examples on TradingView so you can figure out what I'm actually talking about as the candles print, and together we can figure out why I take these trades or would look at taking a trade off of an order block and what actually makes it high probability when these candles are printing. Okay, so here we are on the NASDAQ daily chart. As you can see, our previous day we bounced out of this daily fair value gap here, which tells us that we're probably bullish up to this high here and potentially up to this high over here. This is going to be your main level of interest. If you understand the next day model or in my mentorship, you understand that that's a level of interest for us since we failed to displace the low. So internal to external liquidity tells us we're looking for that high. So let's go ahead and hop down onto the 5-minute time frame, bring us up to the New York session, and see what we can see. Okay, so now we're on the 5-minute time frame. As you can see, this green line up here is your previous day high, which is where you would expect price to go. As you can see here, if you're in my mentorship, once again, this is a potential market maker buy model since we haven't taken out the Asia high yet. So you have consolidation or accumulation, redistribution or distribution, and potentially a smart money reversal down here. As we take a look here, once again, we're inside of this daily fair value gap, which is this blue shaded area here. We do have some engineered liquidity down here in the form of these relative equal lows here. We're about to open up price here at 9:30 open. As price does that, we take out this sell side liquidity and we start to push up here. So now in order to create a high probability order block, we need three things. First off, we need to see a normal order block be put in yet, which we haven't quite seen. Still taking out more sell side liquidity here on the 5-minute time frame. We're bullish out of this 5-minute fair value gap, remember, or sorry, the daily fair value gap up towards this high. We do like this high here, which is going to be a key London swing point. So I'm going to mark this level out here as well, but ultimately you would expect some higher prices in general. As you can see, it's 9:45 here, so we're coming into the macro, which is extra confluence. we now have price. All three have been met. All three checkboxes have been met for us to qualify this as a high probability order block. And to remind you, you need price to trade above this high, which it's done. You need price to close above the opening price here, which it's done, qualifying this as an order block. And what makes this a high probability order block is we would have traded and closed above this high, meaning this is your break in market structure. And we've also displaced, creating a fair value gap here. So now you have a high probability order block. You could take your entry right at this order block. Your stop loss can go wherever you'd like. For the sake of the video and for the sake of teaching you how to actually place a stop loss here, let's talk about mean threshold, which is going to be the mean or the middle of the candle or the order block. So from opening price to closing price, or the bodies. This is your mean threshold, which means you would want a stop loss somewhere below this, where it allows price to wick into the mean threshold, but we don't want to catch a close below this. If we catch a close below this, we're probably incorrect and the order block is likely to fail. So we're going to place our stop loss around this area here, which allows some wicks, but not a body theoretically to close this. Ultimately, let's target this London high up here. It's going to be about 2.6 R. If you know how I like to trade, I like to target a 2.5, but since the liquidity pool is right there, you can see us potentially running up into this high. So price comes back down into this order block. I'm not sure if we would have gotten filled there. TradingView said we would have, but let's see if we can get another one. So we do inside this order block and inside the fair value gap there. I'm just going to bring this to the front so you can see where the order block is. And there's also this little tiny fair value gap right here as well, making this extra high probability. So now we would expect to see price expand higher, which it does here inside the macro at 10 o'clock, pushing us higher. We would probably be at break even now since we've shifted structure above this high. We've created some new fair value gaps, which we would expect price to bounce off of or support us. And then as we find, I think, some support here, I would expect, looks to be the case for now. Let's see what price does. Still supporting us, pushing us higher, creating a potentially another high probability order block, right? So as you get above this high here, ideally you want to see price come above here. So we need the price to come above here for an actual shift in market structure to create a high probability order block. But this would be your standard or lower probability order block with a fair value gap. So let's see what price does. Pushes us up higher here. Still finding some support. No close above this high yet, so we don't have a new high probability order block. Finding some support in this standard order block and this fair value gap here. Still finding some support there, still pushing us up higher. Still no close above that high, no break in structure. Now you have a close above that high, qualifying this as a high probability order block if it ever comes back down to it. Ooh, looks like we might. Let's see. Price tags into this candle right here, which is going to be another high probability order block. We're already in the trade, so we're not stressing about re-entering here. But if you didn't have an entry, this is a potential good opportunity to get back in long because our bias is higher prices or bullish. Back into that order block, still finding some support here. Another internal liquidity sweep here. Let's see if we can get above this here to create another order block. Price pushes up here, back into that lower probability order block. Looks to be finding some short-term support here. I'm going to speed this up because I don't want to keep commentating this. Let's see. There you go. Price finds some support at the order blocks, as you can see, and then pushes up towards London high, ultimately giving you your profit at 2.6, I think was the RR on that trade, all using this high probability order block. And like I mentioned, if you missed that trade, this was also a high probability order block. And to give you an idea, your stop loss could have been below these lows, below this fair value gap candle, or anywhere that allows you to ultimately keep your trade safe with the mean threshold, which you can see the wicks bounce off of this, right? You want to leave space for wicks, but you don't want to allow a body to close below the mean threshold. If a body closes below the mean threshold, your trade is likely null and void, and you're likely to get stopped out. So we don't want to necessarily enter if we've seen it close below the mean threshold. And if we do, it's an early indication. If we see it close below the mean threshold, it's an early indication that price is likely to fail and the order block is likely to fail or be traded through. As you can see, wicks did the damage here if you placed a stop loss at the mean threshold, but the bodies told the story, still holding that mean threshold and ultimately pushing up towards your target up here. So I hope that kind of makes some sense. Let's go ahead and hop into another example so we can really drive this point home. Okay, so here we are on the weekly ES chart here. So I just want to show you that this isn't a one time frame, one concept, one asset type theory here. So if we take a look at the weekly time frame here and you understand daily bias in the term of internal range liquidity to external range liquidity, which we just covered in my mentorship, you can see that price should be running up to this high here. That would be your expectation towards these relative equal highs. And when you hop down onto the daily time frame, this becomes even more confident since we have these relative equal highs up here that are forming on the daily time frame. This to me tells us that we want to see these highs ran. Now, we did fail to displace above this high. So if you know the next day model, this tells you that we want to see price come towards this low here. So I'll mark that out with a green line so we can differentiate there. Now, what could we see? Because ultimately we want to see higher prices on the week. If price does come down into this daily fair value gap down here, qualify this previous day low or sweep this previous day low and then start to work higher, we'd want to be able to see if we can catch a long opportunity out of this area here or below this low. So let's go ahead and hop down onto the lower time frames here and see what we can find. So if we play out price here on the hourly time frame now, let's wait till we get down below that low and let's get some lower time frame confirmation here. Okay, so here's this previous day low, this green line that we're looking at. And we want to see price come up towards these relative equal daily highs here and ultimately this weekly relative equal high over here. So let's go ahead and hop into, let's say, a 15-minute time frame here, and let's see what price is doing here. So right now it's currently 1:45 going into 2 o'clock here. We're on the 15-minute time frame instead of the 5. If we're going to create an order block, we would need price to get above this high, which is going to be your shift in market structure. We can see there's some narrative here with this low right here being a potential sweep of liquidity inside this daily fair value gap. So at this point here, we're currently forming, this is going to be the body of the daily candle, but you want to see if we can create a wick inside this daily fair value gap and then ultimately push us up towards these relative equal highs. So let's see what price does here. We initially reject this little fair value gap in here, but now we're starting to invert that fair value gap. Let's see if we find some support in this fair value gap. Nope, not quite. Pushing up here a bit, and officially now you have your shift in structure. So above this high, you now have a bullish trend potentially starting to form here. So that's step number one. You have the narrative behind the liquidity sweep here. You have a close above this high, right? And you have a wick above this high as well. So not only do you have a wick above this high to qualify the order block, you have a close above it to qualify the shift in structure. So now, and only now, do you have a high probability order block because you also have fair value gaps here and a fair value gap here, and potentially we'll see if we have another fair value gap that forms to just add some confirmation. But essentially you'd be able to take an entry somewhere here, and you would probably be looking upwards towards this liquidity pool here. Now, if you're asking why this high, I don't have it. Explaining why this high is the drawn liquidity is a bit out of scope for this video, but if you understand market maker models, for those of you that have been with me for a while, you know that this is the pool that I would be looking for off that breaker block and that manipulation leg there. But essentially, we're going to see if we can get tagged in here. Now you have another fair value gap above this shift in structure. This becomes a really high probability area of entry. So as you can see, let's just move this order block to the front so you actually see where it is on the chart so it doesn't look as ugly. There we go. Let's drag this over. Let's wait to see if we get tagged in here. So it's actually the next day here, Wednesday at 11:30 p.m. now, off of this this 15-minute order block. And let's see what price does here. And ultimately we run up towards this liquidity pool. And let's see if we pick the right liquidity pool at that 2 to 2.5 area. We might still go higher, and that's totally fine. Yeah, so there you go. We still went higher up into even this this daily drawn liquidity up here in the form of these relative equal highs. And the weekly time frame draw, I guess almost, which would be up here, right? So our higher time frame bias was used to give us the direction we wanted to see price go, and then we wanted to use these lower time frame shifts in structure, order blocks, fair value gaps, things of that nature to tell you when you can enter the trade and when it's okay to get in line with this high time frame bias, which ultimately tells you you're going into higher prices. Now, obviously, if you wanted to hold this for the entire week, you could have got a nice 10-to-1 trade, give or take. We were just looking at this one, 5-to-1 risk to reward trade. Really nice opportunity here on the S&P 500 or the ES futures. But essentially what you're looking for is you're looking for the narrative here. So the high time frame bias, the sweep of liquidity here. Then you need the shift in structure, the order block or the change in the state of delivery with a fair value gap. And now you have a high probability order block where you can be targeting opposing liquidity or your draw on liquidity in the form of these relative equal highs on the daily time frame and ultimately this weekly high over here. So I hope you guys did find that useful. The last thing that I want to leave you with is sometimes you will not get filled on these all the time, right? They're high probability order blocks, so they're not always going to get tagged into. If we take a look at this example here, you can see we sweep liquidity on this low here. We still have a bullish bias. We have some nice relative equal highs here that price would likely want to draw towards. You have this break in structure right here, right? So price gets above this swing high, high, low, sweeping out the liquidity, pushing up, creating an imbalance here or a fair value gap, and ultimately creating a high probability order block on this candle's opening price here. Now, if you were to try and take an entry here, you would see the price never comes back to this, and your drawn liquidity or your target actually gets hit well before price ever revisits this area. I think to this day it hasn't revisited this area. So you need to be cautious of, or you need to be knowing and understanding that you're not always going to get filled on these. Sometimes price is just going to leave without you and you have to be okay with that. But you want to use this as an entry model or a way to get in the trade when you think you know the bias or the direction of the market. And there are specific and technical ways to figure that out, which we'll cover in the future. But for now, I hope you guys found that insightful. If you do have any questions, make sure to let me know in the comment section down below, and I will do my best to answer those. And until next time.